Hi, everyone. Good afternoon. This is Sean Jones. I'm the Director of Supplier Diversity here at Walgreens. And I just wanted to take some time out to thank everyone for joining the call today. I think this is a really fantastic webinar that we have in store in terms of giving some information around the SBA disaster loans under the CARES Act. And first and foremost, I really want to make sure that everyone's staying healthy and safe out there. We really are excited to partner with the Women's Business Development Center here in Chicago to put this webinar on and really to help our suppliers with these loans during these unprecedented times that we're in. And our commitment right now is really to support our customers as well as our team members and patients, but also our suppliers. And that's really what we're going to be concentrating on today specifically. So I do want to thank Abigail and Lotica ahead of time. They're going to be putting on this webinar going forward and really going through what sort of programs are available today and kind of walk you through the latest updates on the funding that's going through our government to be passed, as well as the specific loans that are out there and how you can get in and apply for those loans going forward. So with that being said, without further ado, I know there's a lot of information that we're going to be covering. I'm going to turn over to Lotica and Abigail to kick this off. So thank you.
Thank you, Sean. Good afternoon, everyone. Thank you for joining us today on this webinar with Walgreens. So my name is Lotica Pai, and I'm the Managing Director of Access to Capital at the Women's Business Development Center. Founded 32 years ago in 1986, we are a nationally recognized not-for-profit leader in the field of economic development. And joining me today is Abigail Scanlon, who is the Associate Director of Access to Capital. So during this presentation, we want to hear from you. We encourage you to please use the question box feature of this webinar to post your questions. We have a lot of topics to cover, so Abby will be moderating the questions on chat during the webinar. We have also set aside some time to go through a Q&A session at the end of this presentation. We will be covering a lot of ground today, so we would like to mention that you can download this presentation under the handouts section of this webinar. You can find that on the right-hand side of your screen. So, before we dive into the details, a few clarifying points on the current evolving situation around the CARES Act. As everyone is aware, the first round of funding for the Payment Protection Program and the Economic Injury Disaster Loans has been exhausted. The SBA has processed more than 14 years worth of loans in less than 14 days. Right now, both the SBA and the Treasury are just waiting on Congress to hopefully approve appropriations of additional funds for these programs today. I mean, we're hoping that it's done today. Senate approved the new funding Tuesday afternoon. And the reason I want to make sure that everyone is aware of the current situation at the outset is because these federal loans are allocated, approved, and dispersed on a first-come, first-served basis. So once these additional funds are appropriated, the loan application window will open. And at that time, it's really important that you apply as soon as possible because it's expected that this next round of funds will be allocated very quickly as well, given the magnitude of need for financial relief for the small businesses across the country. So the agenda for today really is to provide you with an overview of the three pillars of the CARES Act for small businesses. And since we are hopeful that the appropriations for additional funding will happen today, we want today's webinar to provide all eligible small businesses with a really clear roadmap on how to access financial relief as soon as the application window opens up. Again, first come, first served basis. There are already millions of small businesses in queue even before the application window was closed. So if you haven't applied already, we hope this content provides you with sufficient guidance that you can work with and apply as soon as possible. So getting back to the CARES Act, it was signed into law on March 27th, and it aims to provide economic relief for individuals, businesses, and the healthcare industry in response to this growing coronavirus pandemic. It is the largest economic stimulus package in US history. So I'm sure everyone read the news today. The American economy is now facing the sharpest rise in unemployment in its history. Today morning it was announced that 4.4 million jobless claims were filed last week, and that brings the 5-week total to over 26 million people since mid-March. And these numbers really clearly highlight the devastating impact of the COVID-19 pandemic on businesses across the country. So under the CARES Act, 2 major loan programs were established by the government. $500 billion was allocated to help large corporations, and the SBA received funding and authority under the CARES Act to modify its existing loan programs and establish a new loan and grant program to assist small businesses across America. So in addition to the funding they received for fully guaranteed loans, the small business package under the CARES Act originally included an additional $10 billion for providing direct grants to small businesses as emergency economic injury grants. And this was just an advance to businesses who have applied for an EIDL loan, the economic injury disaster loan. The government also allocated, under the initial passage of the CARES Act, $17 billion for loan subsidies under the SBA debt relief program, which in effect is also a grant to small businesses. And we'll provide you with an overview on these loan subsidies and what it could mean for you later in the webinar. So on Tuesday afternoon, this week, a new round of funding was approved by the Senate, and this new package, it's really interesting. It's expected to add about $310 billion to the PPP program. And, as we already discussed, the House is expected to approve the bill today, and I'm assuming that implies that the application portals will open back up on Friday, if not sooner. And again, this funding is expected to run out fairly soon, given the magnitude of the demand. The PPP program's initial allocation was $349 billion, and it was exhausted in just 14 days. So, if we kind of dig further into what this increased funding entails, so $310 billion for PPP. Within that, it's been bifurcated into 2 very clear segments. One is $250 billion to refill the existing program with existing lenders. And then what the government did this time around is $60 billion of additional funding was appropriated for PPP, which is set aside for loans made by smaller financial institutions like credit unions, community development financial institutions, and community banks. And the goal really was that they wanted this PPP loan to be made more accessible to rural businesses and micro businesses. And an additional $50 billion was allocated for the economic injury disaster loan program. So compare that to the initial $7 billion that was allocated under the passage of the CARES Act. So while small business, if you look at small business owners across America, they're lining up to get their PPP loans, we would like to remind everyone that the EIDL loan is also a really great program for small business owners. Then in addition to this, and $10 billion were allocated for the EIDL grants and advances, which we will cover later. And under the original CARES Act, it was also a $10 billion allocation for the grant program. So, I want to pause here for 1 minute because it's just a reality check in terms of why I believe that while this funding is desperately needed by small businesses, it's not nearly enough. So if you go back to 2017, which is like the most recent available statistics that we have, according to the US Census Bureau, the total annual payroll for firms with fewer than 500 employees was about $2.7 trillion. So that works out to about $225 billion a month. So the PPP program, even with this new allocation, which is expected to be approved, I mean, it really has inadequate funding to approve, to provide all eligible employers with forgivable loans for 2.5 months of payroll. But it is there, and it's, and if you haven't applied, like, I would really, really urge you to get in the queue. So, let's dive right into now what the 3 pillars of the CARES Act are for small business owners. And again, our goal for today is to provide very clear guidance to you on how to access financial relief from these federal SBA loan programs under the CARES Act. So many small businesses, as you well know, are struggling to get started. There are loan opportunities, there are grant opportunities available for financial relief by the federal government through the CARES Act. We also have state, city, and local governments that are stepping up in a significant way and have launched their own loan funds and grant programs for small business owners. But when you look at 3 pillars of the CARES Act, it's the PPP, the EIDL loans, and the small business debt relief program. Now, so much at stake right now with the long road to economic recovery that we have in front of us. So as a small business owner, if you're thinking about which option to pursue first, we recommend that if you qualify and are looking for a really quick infusion of a smaller amount of cash to keep your business in business, apply for an economic injury disaster loan and receive an advance on that loan, which is up to $10,000, which is a grant to you. And one of the biggest differences, and I want to make that really clear here, between the PPP and the EIDL program is that the EIDL loans and grants, they are underwritten directly by the SBA. There are no banks acting as financial intermediaries. And once approved, the loan funds are dispersed directly by the Treasury. So there are no middlemen in this process. And then when you look at the 3rd pillar, which is the SBA debt relief program, it is to really just ease your fears about keeping up with payments on your existing SBA loans. There's no enrollment necessary. It's supposed to be automatic. And it applies only to non-disaster loans. And it really is a grant to you. So we'll cover that. And I really want to kick into diving into the details portion of this webinar with the Paycheck Protection Program, or the PPP that was launched on April 3rd to provide small business owners with the capital to cover the cost of retaining their employees. And it really is the cornerstone of the CARES Act, because these are forgivable loans to small business owners to pay their employees. So quick overview of the eligibility requirements for PPP. As I'm sure everyone is now aware, that the CARES Act really expanded the definition of small businesses. So in very broad terms, all businesses with 500 or fewer employees can apply. And businesses should have been in operation on February 15th of 2020. And they either had employees to whom they paid salaries, or they had employed independent contractors. And for the requested loan amount, borrowers must submit supporting payroll documentation to establish eligibility. So in a new guidance, which was issued around 1 o'clock today afternoon, the SBA announced new rules which would potentially bar larger public companies from the latest round of stimulus money that is hopefully getting approved as we speak. So in the last round of funding, around 70 publicly traded companies received monies before the money ran out. And obviously that's created a lot of hue and cry in the public. And the SBA issued this new guidance to make sure that doesn't happen again with this new round of funding. For ineligibility, I would like to point out that household employers are not considered to be businesses. Also, standard rules apply around being engaged in activities that are considered illegal, or an owner being convicted of a felony, or businesses being delinquent or defaulting on an SBA loan in the past 7 years. So, let's kind of discuss the loan terms for PPP. The loan amount is capped at $10 million and the interest rate is set at 1%. On the loan terms, I would also like to just kind of point out that this is an evolving situation. Please look out for additional guidance in case anything changes in this next round of funding. Just to give you an example of how fluid things have been, when the CARES Act was passed into law on March 27th, the interest rate was set at 4%. The following week, the interest rate dropped to 0.5%. And since April 3rd, which is when the PPP program was launched, the interest rate was anchored at 1%. So please, for this new round of funding, look out for any additional guidance that is released by the SBA. Loan maturity is set at 2 years. And there are zero loan fees, there are no borrower fees, there are no prepayment penalties, there are no collateral and personal guarantee requirements, and payments are deferred up to 6 months. So as you can see, this is a really generous loan program for borrowers. We would like to remind everyone that there are some very clear guardrails around allowed use of funds. Loan proceeds can only be used to cover payroll, healthcare costs, mortgage interest payments, rent and utility payments, and interest on pre-existing debt obligations. These loans are not intended to be used for business expansion or replacing lost sales. So in terms of when you can apply, online applications are temporarily closed for small business owners, sole proprietors, independent contractors, and self-employed individuals. So right now, banks are dispersing the rescue funds from the first round of applications. And if you look at data that SBA released as of Thursday, April 16th, the overall average loan size is about $206,000. And once the application window opens up again, we are recommending that small business owners who haven't already applied and need access to this financial relief to apply as quickly as possible. Because like we mentioned, this tranche of capital is expected to be exhausted very quickly. So the rapid rollout of the PPP program has been a bit chaotic and rocky. And while, again, this goes back to having financial intermediaries in this process. So while this program is administered by the SBA, it relies on private banks and financial institutions to actually make the loans, which are then backed by the government. So most banks that already do SBA lending are participating in the PPP program, but most financial institutions are prioritizing their own clients first. And the main reason for that really is, I know there's been a lot in the press, but the main reason for that really is because banks are still required by the federal government to abide by anti-money laundering rules. So really that delays their ability to open business banking accounts for brand new customers at a time like this when they're processing thousands and thousands of PPP loan applications. So we are all now aware of because of that, we're all now aware of the inequities in capital allocations for PPP loans. There are, unlike the EIDL loans where the loans were underwritten directly by the SBA, for the PPP loans, private financial institutions are the gatekeepers. So what the SBA did actually last week, which is very interesting and very innovative, is that they have tried to make the PPP loan program more accessible to micro businesses by providing by approving these really large tech companies, these technology giants like PayPal, Intuit, and Square to participate in the PPP program. So if you have a merchant account with PayPal or Square, or you process payroll via QuickBooks, which is owned by Intuit, these are great places to apply for a PPP loan. From what we have learned from small business owners we work with, these large tech giants have been processing applications really quickly. And all loans will have the same terms regardless of the lender or the borrower. Also with this new round of funding, the $60 billion being allocated to smaller CDFIs, which are community development financial institutions, smaller credit unions, and community banks, please take a look at the PPP Lender Finder link, which is on this page, to find approved lending institutions that you can work with. As you're getting ready to apply for the PPP loan, make sure you check your eligibility first. It's very important to apply early because the application deadline is set to June 30th. These loans, again, are first come, first serve. So, you really need to get in the queue. Now, assuming that you apply and you're approved, remember again that there are very clear guardrails that determine eligible use of funds. So please track what you spend the loan proceeds on. The Treasury guidance warns that if you, as a small business owner, knowingly use the funds for unauthorized purposes, you could be subject to additional liabilities such as charges of fraud. Remember the goal, going back to the intent and goal of this program, it really is to lower unemployment numbers. So unemployment has been a reliable lagging indicator for the overall health of our economy. And that's what the government is trying to do with the PPP program, is to bring the unemployment numbers down. Also remember in step 4, loan forgiveness is not automatic. SBA may also limit the time frame by which you need to apply for forgiveness. And you can stay tuned for additional guidance on that. So what do you need to apply? It's actually really straightforward. Small business owners have to certify that they need this financial relief because they were impacted by the COVID-19 crisis. You really just have to fill out a simple 2-page SBA form, which is SBA form 2483. All the lenders will have that form embedded in their online loan applications. And you have to provide proof of payroll. Payroll processors like ADP, TriNet, and Paychex are fully prepared to provide you with information on eligible payroll amounts. They have everything computed already. And if you're working with a bank with whom you do not have an existing relationship with, just be prepared to provide them with these organizational documents so that they can conduct their KYC verification process, which is the Know Your Customer verification process. And also be aware that individual banks are different and they might ask you for additional documentation based on their internal processes. So that gets us to the question of who needs to complete this application. And guidance on this, again, is really straightforward. When you break it down, it is that any individual who is a 20% or greater owner of the applicant business needs to sign and certify the loan application. And that's it. So 20% or greater owner of the applicant business. This gets us to the question that we are asked most often. How is the PPP loan amount determined? So the loan amount will be based on 2.5 times your average monthly payroll costs, and that excludes costs over $100,000 on an annualized basis for each employee. A small business cannot count independent contractors as employees for the purposes of the PPP loan calculation, and that is because independent contractors have the ability to apply for a PPP loan on their own. So if you were in business in 2019, your max loan amount that you're eligible for is 2.5 times your average monthly payroll cost in 2019. If you were a seasonal business, you can use different months to calculate your average monthly payroll cost, and you can use the time period between February 15th, 2019 and June 30th, 2019. Just work with your lender on which months work for you. And if you're a new business, that is, you were not in business in 2019, then the PPP loan amount is equal to 2.5 times your average monthly payroll costs between 2 months. That is January 1st, 2020 and February 29th, 2020. That's it. It's really simple. If you took out an economic injury disaster loan and you want to refinance that loan into a PPP loan, what do? You add the outstanding EIDL loan amount, the idle loan amount, to the payroll sum that you have calculated for PPP, and you subtract the advance or the grant that you received, since that doesn't have to be repaid and the government doesn't want to double dip on the grant amounts. And that's it. That's kind of how it's that simple. It's 2.5 times your average monthly payroll costs. So that brings us to, what do self-employed individuals do when they're trying to calculate their eligible PPP loan amounts? And that also is a really simple calculation. So you look at your 2019 IRS form 1040 Schedule C, look at line 31, which is your net profit amount. You divide that by 12 to get the monthly average net profit amount, and that number you multiply by 2.5 times, and that is the maximum PPP loan amount that you're eligible for. If you haven't filed a 2019 return yet, fill it out and compute the value, because the banks would like to see it. And if this amount is over $100,000, you need to reduce it to $100,000. And if the amount is 0 or less, you are not eligible for a PPP loan. In terms of, what information the banks will verify, during this crisis, it's not possible for them to determine your repayment ability, right? Because all businesses are projecting negative revenues or sliding revenues, and it's very hard to predict the future. So what the lenders really are required to verify is that the borrower, number one, that the borrower was in operation on February 15th of 2020. That is a hard criteria. And then also, it's, they have to confirm receipt. The SBA will allow lenders to rely on these certifications made by the borrower in good faith in order to determine eligibility. And finally, the lenders must confirm the eligible loan amount. And that is why it is very important to provide your lender with complete payroll documentation. This program is really flexible in terms of eligibility and limited information the banks have to verify. So we want to take a moment to remind you again that certifications made by the borrower in good faith on the loan applications are very important. The SBA is allowing lenders to rely on these certifications in order to determine eligibility of the borrower and the use of loan proceeds, right? So, however, there could be an audit in the future, and if the loan proceeds were used for fraudulent purposes or inaccurate certifications were made, the US government has indicated that they will pursue criminal charges. So just be aware of it. It's really flexible right now because they need to get the money on Main Street, but down the line, there is an opportunity for audits and small business owners being accountable for what they have certified to and how they have used the proceeds. Again, really quick recap of the eligible use of funds for the Payment Protection Program. Proceeds from these loans must be used within the first 8 weeks of receiving the funds, and they must be used for the purposes highlighted to be eligible for loan forgiveness. So you have payroll costs, including benefits, and business expenses like interest on existing mortgage obligations, rent and utilities. These are all eligible uses of funds. And eligible payroll costs, if you break them down, they include salary, wages, and compensation, capped at $100,000 on an annualized basis for each employee. All employee benefits, including insurance premiums for group healthcare benefits, and it also includes payment for any retirement benefits. And the eligible payroll costs also include state and local taxes assessed on compensation. And now we get to why the PPP program is so unique. The loan forgiveness is where the PPP program morphs from a loan, from being a loan into a grant to the small business owner. So at least 75% of the forgiven amount. So whatever loan that is given to you, if you want 100% of it to be forgiven, you must use 75% of that loan on payroll. So, again, I'm going to reiterate that if you want to be fully forgiven for the loan that you take on in the PPP grant, in the PPP loan, if you want to be 100% forgiven, you have to use at least 75% of the loan proceeds on payroll. And if you use the loan amount for anything other than the outlined use of funds over the 8-week period immediately after getting the loan, you will owe money on the loan. And you will also owe money if you do not maintain your staff and payroll. So, businesses are expected to maintain staff and payroll. And the loan forgiveness amount, it actually decreases, it's reduced if either full-time employee headcount drops or salaries are reduced by more than 25% for any employee. And businesses really have until June 30th of 2020 to restore full-time employment and salary levels to accommodate for any changes that they would have made between February 15th, which is the start of the PPP eligibility date, and April 26th of 2020, which is, in a few days from now. So this is really important because this is what determines how much of that loan morphs into a grant. The rest you have to pay back to the government. And yes, the interest rate is 1% and the payments are deferred by, 6 months. You still have to pay this money back in 2 years. In terms of applying for loan forgiveness, you have to apply through your lender for forgiveness on your loan. You have to provide your lender with documentation verifying the number of employees on payroll and their pay rates, documentation verifying payment, covered mortgage obligations, lease obligations, and utilities. And again, you have to provide a certification that the amount that is being forgiven was used in accordance with the program guidelines. And so please, again, I'm going to mention this again here, keep track of the PPP loan amount that you spent because you need to provide documentation to be eligible for loan forgiveness. We have detailed here some of the common questions that business owners have been asking us. You can easily download this presentation during the webinar if you like under the handouts section for your reference, but I just wanted to highlight few as we're going through here. So one business entity is limited to one PPP loan. And another question that we have been asked increasingly over the past 1 week is, does the participation in PPP affect your eligibility for state administered unemployment compensation? And the answer is yes, it might. The newest guidance for the PPP loan that came out last week gave a very, it's a very general warning, which stated that you should be aware that participation in the PPP may affect your eligibility for administered unemployment compensation or unemployment assistance program. Now that's really broad and it didn't really provide any detail on why that would be or what that even means. We do expect clarifying guidance on this soon, so hopefully that is provided with this particular round of funding. And everyone knows that the PPP loans dried up just days after they became available to gig workers, freelancers, and the self-employed individuals. And for the first time ever in American history, unemployment insurance is now available to self-employed people. So while these expansions are happening at the federal level, these are administered through individual states. That means each state implements policies through their own unemployment insurance program. So you have to apply directly with your home state to get your benefits. Here the key questions we have been asked for, multiple times for self-employed individuals is that what amounts shall be eligible for forgiveness? And, again, clarifying that here is that loan forgiveness is limited to a proportionate 8-week share of your 2019 net profit as it is reflected in your individual 2019 form 1040 Schedule C, line 31. And all other eligible business expenses are eligible to the extent that they are deductible on Form 1040 Schedule C. And, I'm going to wind up the PPP loan discussion with a general warning on predatory lenders. We are seeing a significant uptick in predatory lenders. Please be aware that none of the current disaster programs have fees associated with them for borrowers. All disaster programs are first come, first served basis. Please do not be fooled by services that will charge you to expedite your loan through this system, because they simply cannot. So that brings us to the second pillar of the CARES Act for small businesses, which is the Economic Injury Disaster Loan Program. And it's meant to be a really quick infusion of a smaller amount of cash to cover your working capital needs. And before we dive into the details for the EIDL program, I just wanted to provide you with some context. So this loan program has been around for a while, but it was not really designed to handle a disaster of this magnitude, one that has sent unemployment claims soaring and it's forced businesses to close across the country. The program's previous peak in 2006 after Hurricane Katrina, when the SBA dispersed EIDL loans of $1.7 billion for disaster relief. So initially, the CARES Act had allocated $7 billion in EIDL lending. In response to the COVID-19 pandemic, it added $10 billion to the CARES Act to fund the cash grants associated with this, but the demand has been extraordinary. And this new funding round adds an additional $50 billion to fund EIDL loans and an additional $10 billion allocated to funding the grant portion of the EIDL. These low-income federal disaster loans for working capital are really important. I feel, they really fill a gap that the PPP program doesn't fill. Small businesses, independent contractors, private nonprofits, everyone is eligible to apply for the EIDL loans. The CARES Act significantly expanded the definition for small businesses eligible for disaster loans. And for the grant dollars eligibility, to access the advance, you must first apply for EIDL and then request in advance. And again, loan terms are very favorable for small business owners. Loan amounts up to $2 million, interest rates of 3.75% for small businesses, loan maturity terms of up to a maximum of 30 years. First payment is deferred for 1 year. Borrowers must be in business as of January 31st of 2020, and no personal guarantees for loans under $200,000. No collateral requirements for loans under $500,000. Also, the EIDL grant is not a straight $10,000 grant. It is based on employees on staff. So current guidance is $1,000 advance per employee. On collateral requirements, super important to point out that loans greater than $500,000 will be secured loans. And the SBA has noted that they will not decline a loan based on lack of collateral. So that is, again, it's very important to note that, because these are disaster loans. Applying for an EIDL is really, really simple. Check your eligibility and credit for EIDL loans, for the EIDL loans that close before December 31st. The SBA has indicated that to simplify the process, they will base all their credit decisions on credit scores. And while the SBA has also indicated that they have no minimum threshold for credit scores for disaster loans, they will check for it. So review credit for all owners being represented on the loan. And also, here, because these loans have a 30-year maturity, the SBA will check the applicant's ability to repay the SBA loan, which is really determined on a case-by-case basis. Step 2, fill out the disaster loan application. Fill out your online application on the disaster loan assistance portal. And then the final step is apply for the advance and be prepared with supporting documentation. That's it. It is that simple. The current funding is exhausted and the portal is right now closed until Congress approves the additional funds today. But again, for new applications, go to covid19relief.sba.gov, and it's a really simple, straightforward 4-step process. Most small businesses have been able to fill out this information and submit it in less than 30 minutes. So get in the queue. If you haven't applied for it, apply as soon as the portal opens and get in the queue. 4 steps to this process. In the disclosures section, you verify your eligibility. In the second step, you have to fill in your business information. The only financial information that is required to be filled out at this point is your 12-month revenue and cost of goods sold numbers. In the third step, you fill out your business owner information, really straightforward. And in the final step, you make a few good faith certifications to the government. Check the box here if you would like to be considered for an advance, which is a grant to you, and provide your bank details for the Treasury. And that's it. Really, really simple application process. And as soon as you hit the submit button, you receive a confirmation. Please print this page out for your records, since you do not receive an email till a loan officer is assigned to your applications. And, nowhere on the EIDL application can you actually indicate a loan amount number. So you might be requested to provide supporting documentation to help the SBA underwriter determine the loan amount. The expectation is that businesses should evaluate their working capital needs for a benchmark 2 to 6 month period to determine how much money they need, to really just to keep their business in business. And a simple way in which they can do that is by filling out these 2 simple 1-page forms that clearly highlight to the SBA, especially SBA Form 2202, which is your schedule of liabilities. It highlights what money is still going out of the business, standing accounts payable, mortgage payments, and all of this is going out of your business without the same level of revenues coming in to fulfill these outstanding obligations. In terms of supporting documentation, please be aware that the SBA loan processor might ask you for this additional documentation. So apply first, don't get bogged down with this. You have to get in the queue first. Apply first if you already haven't, but then, take some time to prepare these documents in advance. In case you're asked for them, it'll prevent delays in processing. While the SBA has indicated that it might take them up to 21 days to process these loan applications, again, we'd like to remind everyone that the economic magnitude of the COVID-19 disaster is staggering, and this is an unprecedented situation for the SBA as well. So please be patient. Keeping small businesses alive is absolutely one of the most important tasks in front of the government right now. Because otherwise, if we allow more employers to permanently go out of business, it'll lead to a much longer economic hangover when this public health crisis is done. So it's really important for the government to keep businesses open. In terms of EIDL FAQs, these are just a few commonly asked questions that we have highlighted here for your reference. You have this presentation available to you so you can review them at leisure. And that brings us to the final pillar of the CARES Act for small businesses, which is the Small Business Debt Relief Program. So the goal of this program really is to provide immediate relief to small businesses with non-disaster SBA loans, which is the 7A, the 504, and the microloans. Debt relief does not apply to any disaster loans like the PPP or the EIDL loans. Also, this is not a deferral. This is a grant to small businesses with existing non-disaster SBA loans, because what the SBA is doing is they will automatically cover all loan payments, including principal, interest, and fees for 6 months. And this relief is also being extended and being made available to new borrowers who take out new loans issued prior to September 27th of 2020. And this debt relief is supposed to be automatic. We're still waiting on additional guidance from the SBA on it, and recommend businesses should check in with their SBA lenders. Again, a few questions here commonly, which are highlighted here for your reference. Again, quick reminder that the PPP, the Payment Protection, so the Paycheck Protection Program, and the Economic Injury Disaster loans are not eligible for debt relief. It only is for non-disaster loans by the SBA. If you need, in terms of a final reminder from us, if you need access to SBA loans under the CARES Act to help you through these challenging and uncertain economic times, as soon as the application window opens up, if you haven't already applied, please apply, because you have to get in the queue to be considered for these disaster loans being made available to you. And before we wrap up, since this webinar is being hosted by Walgreens, we wanted to provide small business owners in Illinois with some additional information on local state, city, and county programs providing financial relief. We won't go into the details, but the information is here in this presentation for your reference. I would like to point out that the Chicago Small Business Resiliency Loan Fund, the application deadline for that is actually tomorrow, so Friday, the 24th of April. And you have the state program, you have the Cook County Loan Program. All these programs have really attractive loan terms for borrowers. And here are details on the various loan funds. They are here for your reference, so you can look at it at leisure. And if you have any questions, please do not hesitate to reach out to us. So that wraps up the overview portion of the webinar. Thank you so much for your attention. We covered a lot of ground today and a lot of content, so I'm now opening up the webinar for our Q&A session moderated by Abby. Abby?
Hi, Lotika. So we actually don't have any questions in the box currently.
Yay.
So
Okay.
So you did an amazing job. Thank you. But I will ask, just from previous experience, the question that does come up quite a bit is, whether or not, if you're in the queue with your bank already, what should you do? Should you reapply? Should you go somewhere else? Like, what would you advise?
That's such a challenging question, because there's so many loan applications with so many different lenders that are already in the queue, and we're seeing that multiple borrowers have applied at multiple banks. But again, one loan per applicant, so it's not like as soon as your loan is approved, you kind of get kicked out of the queue, right? So if you take really large financial institutions, for instance, so if you bank with JP Morgan Chase, here in the state of Illinois, almost 40% of small businesses are banking with, JP Morgan Chase, and they are inundated with loan applications. I believe the number was within 5 minutes of them opening their online application portal, they had over 60,000 applications. So you can just imagine the magnitude of small businesses kind of approaching these large financial institutions. So there are a lot of smaller community banks who have been able to process these applications quicker because they don't have they're not seeing these higher loan volumes. And also with this new round of funding, you have non-depository financial institutions like CDFIs who are now becoming eligible PPP processors So those would be great to approach as well if you want, if you either get rejected on your PPP loan and you want to reapply, or you feel that you're so far back in the queue with your larger financial institution that you want to look for other places that you can get those funds from.
Okay, and you feel that's okay to do, right? To apply elsewhere.
Yes, for now. I mean, really, it's just how do you get seen by an underwriter where they will process your application quicker. So I know that, large banks are really struggling with the volumes that they're receiving. I doubt they even have time, like more than 5 minutes per application right now.
Right, and that's where, institutions like PayPal and Square and Intuit kind of play a really big role, correct?
Yes, absolutely. So if you have merchant accounts with PayPal and Square, look into that. If you have payroll processing that happens through QuickBooks, look into it. I think these are really good options for small business owners.
Okay. We did get a question come through. They wonder, to apply for the PPP program, is there one banking institution to apply over another, or should I start with my business bank first? And you kind of addressed that earlier.
I would, please try with your business bank first, because like I mentioned, the anti-money laundering rules still apply for banks. So they would have to open a business banking account for you and go through the KYC verification process. So business bank first, you have an existing relationship with your business banker. But if you feel that you want to approach a non-depository institution like PayPal or Intuit or say Square, and it gives you an edge, apply there.
Okay, excellent. And another question that came up was, I applied and received the PPP, but did not add my lease or utilities. Can I reapply? That's a good question.
So I'm not sure what you mean really by that you did not add your lease and utilities. So, the eligible loan amount is only based on your monthly average payroll cost. That's it. They're not looking at your lease or utility numbers. You can spend it on your mortgage obligations or your utility obligations, existing obligations that your business has, but the eligible loan amount calculation that the bank is undertaking has nothing to do with that. All they're looking at is your monthly average payroll cost, and they're multiplying it by 2.5 times. And if you want to get 100% of that loan forgiven, use at least 75% of the loan amount on payroll, and 25% you can use it, to pay your lease obligations and to pay, your utilities that you need to pay for.
Okay, and to kind of expand on that question too, so the question, so you can pay your lease and utilities with the loan?
Yes, you can. Yeah, those are eligible. Yeah, those are eligible uses of funds. Yes, that's within the guardrails of eligible uses of funds for the PPP. Yes.
So so let me rephrase it then, maybe. If they applied for the wrong amount and they found that they actually needed additional funding, could they go back to their bank and perhaps ask for more?
No. One PPP loan for one business entity. And banks are adjusting the PPP loan amounts for a lot of small businesses that we are working with. So sometimes people have asked for more and the banks have adjusted it down to the exact number, which is monthly payroll cost multiplied by 2.5. And sometimes I have worked with small business owners who've applied for too less. And when the banks have done the verification process, they've actually increased the PPP loan amount. So I'm hoping that when their bank did the calculation and verified the loan amount calculation, they went through that step with them. But again, there is one PPP loan per entity, and I really doubt that the banks are going to reapply and try to reallocate more money for individual loan that they've already approved. I hope that answers the question.
Yes, I think it did. But then additionally, so if they had contractors, those individuals would not qualify for the PPP for that business. Those contractors would have to either apply for unemployment or apply on their own for PPP, correct?
Yes, absolutely. So PPP loans, the window opened up for 1099 contractors and self-employed individuals to apply on April 10th. However, the entire money ran out just within a few days of the window opening up for them. But yes, you're exactly right. The PPP loan amount calculation cannot include any 1099 contract workers in the loan calculation amount because they can apply for themselves.
And this question came up in a previous webinar that you and I had done earlier, but I feel like it's important to note, if you can't get some of these employees back, what happens?
So if you cannot rehire and reinstate your employees back to your February 15th level, so if you've made any adjustments to your headcount between February 15th and I believe the date is April 26th of 2020, you have up till June 30th to kind of get back to February 15th levels. But if you can't, then there's a calculation that the SBA will do. You will receive additional guidance on that. They will do to actually reduce your loan forgiveness amount. So if you apply for loan forgiveness, your loan forgiveness amount will be proportionately reduced based on the fewer number of employees that you have right now.
Okay, thank you, Lotika. That's really all that we have for today.
Oh, that's awesome. So, we'd really like to thank Walgreens for sponsoring this webinar. And we would also like to thank everyone who joined us today on this webinar. We hope it was helpful. Sean, kind of handing this over to you to wrap it up.
Yeah, no, thank you so much. This was a fantastic webinar. I love the information. This is all really helpful. Lotika and Abigail, thank you. Thanks to the Women's Business Development Center for really partnering with us on this. We're certainly here to help our suppliers, and feel free, like Lotika and Abigail said, to download the presentation off the handout section here on the webinar. A lot of great information here. And if you have any further questions, feel free to reach out to myself or the folks here at the Women's Business Development Center. You could reach me at supplier.diversity@walgreens.com. Me and my team all have access to that account, and we can make sure that we can be a guide to help you during these unprecedented times. So, but I want to thank everyone again for joining, and stay safe and healthy out there. Have a great day.